Good morning and welcome to 5 Before the Bell, TheStreet.com's global market update and U.S. market preview right here from the Central London studios of Core TV. I am Martin Baccardax. I am the London Bureau Chief here at TheStreet.com, and I'm going to take you through those 5 things you need to know before the bell. It's an exciting day today for the tech sector. The big Apple unveil will come a little bit later. We'll talk about that in a moment. But let's get to European stocks because what we're seeing is really interesting. An extension of this global equity rally, which has been renewed after the weekend, owing to the fact that gratefully, on a human and an economic perspective, Hurricane Irma wasn't nearly as devastating as some had anticipated. That doesn't mitigate the damage that we're seeing in the state of Florida and the millions that are displaced, the millions that are still without power, and those that are literally underwater as we speak, not to mention those in Georgia and other southern U.S. states who are being affected by the tropical depression. But nonetheless, it has to be said that the fact that that storm isn't nearly as devastating as we thought has been good news for equity markets, and those are the things that hopefully will create the jobs and allow for the tax receipts to pay for the rebuild that is going to be needed in much of the state as a result of the storm. So the two are connected, and it is not just a simply caustic look at what's happening in financial markets without the human implications. I want to make that clear. We do understand the way that people are suffering, but gratefully, again, if we can see economic benefit as a result of it, although that sounds callous, it is going to make the lives of the people who have suffered better, and we can only hope that that's the case. I think the fact that we had a UN unanimity on sanctions from the UN Security Council overnight with respect to North Korea was another reason for optimism, particularly in the Asia region, and actually shares there traded at a 10-year high. Globally, the MSCI All-World Index is trading at an all-time high, and in point of fact, the global market capitalization of all companies in the world is larger than the dollar value of all economies in the world. It's only happened on a couple of occasions, once earlier this year, and you can check that out on TheStreet.com. I wrote a short piece about it a couple of months ago, but nonetheless, those numbers are always interesting to me because we are valuing companies more than we are valuing the people underneath and the economies underneath that we're selling things into. That does suggest that we might be at levels that are a little bit troubling for some, but nonetheless, the fact that central banks are still sticking in place with $15 trillion worth of backstop is part of the reason that stocks continue to climb ever higher. Wall Street's called a little bit higher, 48 points on the Dow at the moment, and as I've said, we're looking at solid gains across the European perspective, apart from the FTSE 100, and I'll get to that in a moment. In fact, let's get to it right now. We had a jump in UK inflation to the highest in nearly 5 years. Core inflation at the highest level since 2011. That's according to the Office of National Statistics earlier today. And we're looking at an inflation rate here in the United Kingdom of 2.9%. That's a staggering surge from where we were this time last year. And it's mostly down to the fact that the UK pound has collapsed in foreign exchange markets since the country voted to leave the European Union on June 23rd of 2016. We're down about 13% on a US dollar basis, and even more when you look at other currencies across the board. And that has increased the price of imported goods, it's increased the price of food and fuel and pretty much everything else, and is creating this squeeze that we're seeing on UK consumers where their wages are rising at a much slower pace than consumer prices are accelerating. So these numbers today were interesting in that perspective. When you dig down underneath as well and find out the fact that clothing and shoe prices are at a near decade high, most of it get imported in the textiles industry, you can understand the effect that the pound is having on the way that people live here in the United Kingdom, irrespective of what they see when they travel to Europe or the United States and change their money for less than they have in at least 10 to 15 years. This is troubling indeed, and it could have serious implications for UK growth. But here's the rub. The Bank of England has been telling us that we are too complacent about the low interest rate environment in the world's 5th largest economy. They say that they may have to get rid of these low rates and get rid of their tolerance for faster inflation as a result of the consumer price rises. Bank of England is meeting on Thursday. There is anticipation that they may talk or may even increase interest rates from the record low 0.25%. And when I say record low, I'm not kidding. The Bank of England was formed nearly 400 years ago to finance the country's war against Spain. So when we talk about records, it's the real deal. Now, whether or not the bank is going to follow through on that verbal intervention is hard to say because economic growth just isn't following suit as a result of the extracted negotiations, or protracted negotiations, I should say, between Brussels and London about the ultimate agreement the two countries are going to have, or the two economic blocs are going to have after Brexit. But nonetheless, the fact that we are seeing this faster inflation and a significant decline in the pound probably means that the bank is going to have to do something. Now, the pound has increased today. It's up about 0.9% to the nearest against the US dollar, the highest in about 1 year. Now, that is interesting because of the bets that we are having placed with respect to potential Bank of England rate hikes. But nonetheless, we're still off about 12 or 13% from this time last year, and the implications of that are going to filter through into the numbers in the second half of the year and even into 2018. So we don't see a slowing of this squeeze on consumer incomes. That's going to affect UK growth, and many people still feel that the UK could fall into recession next year as a result. We're going to look at one of the biggest stories probably in the world today, and that's the Apple launch from the Apple Park campus in Cupertino, California, later today. 11 a.m. Pacific time is when we are expected to see the unveiling of 3 new iPhones, including an anniversary edition. Now, here's the thing, though. It's probably going to cost about $1,000. Now, that doesn't mean that it isn't interesting. Facial recognition software, a virtual home button. We're looking at faster processing speeds, a larger screen, longer battery life, better display, richer colors, better cameras, all those sorts of things. And they are making this probably one of the most anticipated smartphone launches of all time. Now, we often associate this with Apple, but nonetheless, this is interesting. There's a fascinating symmetry, of course, in place, given the fact that it is an anniversary issue. It is a 10-year anniversary since the unveiling of the first iPhone by Steve Jobs, and sadly, it is going to take place on the Steve Jobs Theater, which was the last project of the former Apple CEO prior to his untimely death in 2011. Tim Cook is going to take the stage for the first time at this new facility, and he's going to unveil what we expect will be, as I say, 3 iPhones, probably an update to the Apple Watch, and probably an update to Apple TV as well. But it really is the iPhone that we are anticipating, given the enormous importance it has on the bottom and top line of the world's biggest tech company. 63% of Apple's full-year sales last year were the result of the iPhone. They shifted 41 million units in the last quarter, and they are lifting their anticipation for revenue growth in future quarters as a result of what they hope is going to be a successful launch. Interesting today, Samsung fired a shot across the bow of Apple on its big day, saying pre-orders for its Galaxy Note 8 are 2.5 times faster than they were for the Galaxy Note 7, the one that used to explode all the time. Interesting though, 650,000 people who said they want to buy the thing. It's going on sale on Friday, and it is pretty whiz-bang as well when you consider the way that the battery life is also longer, the screen is bigger, the camera is much stronger, and it's been using OLED displays, the kind of thing that we're probably going to see on the iPhone for a number of years now. But again, I want to talk about sticker shock because I do think this is an interesting dimension to the smartphone battle, because both Samsung and Apple have been losing market share in key Asia markets, particularly in China, the fastest growing in the world, because people just see the components as too pricey. When you're looking at $1,000 for the new premium iPhones, these are significant costs for economies that are growing fast, but nonetheless have very low wage bases. And therefore, as a result, China makers of smartphones and discounters have been eating the lunch of both Apple and Samsung in those key markets, and therefore Apple and Samsung have been losing global market share. They still collectively sell about a third of the smartphones all around the world, but they are declining indeed. That said, a quick straw poll of the Core TV gallery producers here today tells me that people might actually continue to pay for the iPhone as a result of the importance it has in everyday life. And even though you're looking at $1,000 and probably a lot more when you're talking about installation of data and everything else, it is so important and such a part of people's lifestyle that the price isn't necessarily going to be an impediment. But here's the other thing. That money is inelastic in the economic term. In other words, if you're paying $1,000 for the iPhone, you're not buying other things heading into the Christmas rush. So I'll be curious to see how these numbers play out in U.S. consumer spending, because ultimately everybody has a finite amount of money in their pockets, and if they are spending this on new gadgets, they're spending less elsewhere, and the ripple effect will be real. But nonetheless, this is going to be a really interesting story today, a fascinating one from a whole host of perspectives, not the least of which is whether or not the stock can reach a record high of $165 today. It's called up about 0.9% in pre-market. It's still valued at about $835 billion US dollars. If it takes out the record high and continues to grow as a result of the iPhone launch success, we could be looking at the first $1 trillion US corporate valuation. Equifax is not looking at that, it has to be said. In fact, it's staring down the barrel of about $3.5 billion worth of lost equity value over the last 2 or 3 days. The stock is called about 1.2% lower today. It fell 8.2% yesterday, and as I say, has fallen more than 20% over the last 2 sessions as a result of the security breach. As we know, 143 million Americans have had their data compromised inside Equifax as a result of the hack. The company told us last week, but of course they told us as well that they found out about it on July 29th. And that is the focus of what we are talking about at the moment, because around 25 lawsuits have been filed against Equifax, including one for securities fraud in a court in Atlanta, as a result of that gap between the company finding out and the company telling us. Now, complicating that further is the fact that senior executives, at least some of them, including the CFO of Equifax, sold stock in the company after the data breach was discovered. The company is adamant that the executives did not know about the breach when they executed the transaction. That isn't stopping the speculation, and it isn't stopping people from potentially looking into it. In fact, we've had Senate lawmakers talking about hearings, talking about investigation, and demanding a timeline from the company as to what they knew, when they knew it, and what they're going to do about it. It's an interesting story from a whole host of perspectives, not the least of which is the fact that so much of our personal data is now being housed on servers from companies like Equifax, like some of its rivals such as TransUnion, but even across the whole smorgasbord of American corporate life. How is that data being protected, and how vulnerable are we to data breaches when the companies suffer hacks, particularly when you're talking about a credit scoring company like Equifax, whose only mission, it should be, is to keep our data safe in order for its correct use from the banks and finance companies that use it to lend us money. So this is an important story, again, for a whole host of perspectives. Another aspect to this, of course, is the way in which the industry is regulated. Now, the Trump administration has talked at length about limiting the red tape that they say is binding U.S. companies. But it has to be said that there isn't a whole lot of regulation around the credit scoring industry and indeed data protection itself. So it will be interesting to see whether the government decides to ramp up regulation on a critical industry or stay true to its promise to unwind red tape that it says is slowing U.S. growth prospects. I'll be fascinated to see how they try to square the circle on that, because the sensitivity of this data is so extreme. More than half of the American population has been affected by the breach, and the stock, as I say, is going to continue to sink today until the company can get his arms around it. And you can imagine the kind of bad PR that's going to be surrounded if indeed its executives find their way to Senate hearings and answer questions on television about the data breach, and again, what they knew and when they knew it. Stock called 1.2% down in pre-market. It's probably going to fall further. Dow Jones Industrial Average, though, looking at a 50-point gain. That's about 0.2% at the start of trading, according to futures prices. I'm also seeing that the NASDAQ may rise about 0.2% and add 14 points to yesterday's close. The S&P 500, as we know, hit a record high last night. It's going to add about 3.75 points to that, according to futures prices. But there's a lot to get through today in order to see whether we can take out those all-time highs. Apple's launch, of course, is going to drive sentiment in the tech sector completely. And in fact, from an S&P perspective, it has about a 3% weight on the overall benchmark. So what happens to Apple today is going to have a tremendous impact on what happens to the S&P 500, and that is, again, likely going to dictate sentiment. U.S. dollar is getting a bit of a bounce back as a result of higher Treasury yields as investors pile into riskier assets and unwind those safe haven trades. So we've got to look at that. Oil price is not doing much. I think investors are still trying to understand the dimensions of the return to capacity for the U.S. refining industry and the demand destruction that we're going to see as a result of Irma, Harvey, and potentially Hurricane Jose, which hasn't really slowed down on its path to the United States and still could be something that we need to worry about. So all of those things will need to be picked through during trading today. But as I say, it is looking bullish, and global stocks are on the front foot apart from the FTSE 100. And I do believe that we'll probably stay into the green through the rest of the day, at least until we understand exactly what's coming out of Cupertino. And we're all going to be watching that. And you guys come back to TheStreet.com. We'll have a live blog, detailed coverage as well from the tech team in the United States that knows this story inside out. And again, it's one worth watching, even if you don't own the phone, because it does look pretty cool. Anyway, that's it from us here in the Central London studios of Core TV. I'm Martin Baccardax, London Bureau Chief at TheStreet.com. Thanks for watching. We'll see you guys tomorrow.